Hello, my name is Gina Jeter, and for week 2, I've selected the topic Cash Basis Accounting. What is cash basis accounting and why is it important? Cash basis accounting is an accounting method that records revenues only when cash is received and expenses only when cash is paid. So it falls right under the word. It's all about cash. It's important because it gives you the ability to timely track cash going out and coming in. This method is very easy to track, and that's a great important benefit. Also, the cash should be able to be tracked by just comparing the activity that's going on in your bank account. Next, what is the concept and how can it be used in decision making? Well, this method records transactions only with cash. So we're speaking of cash receipts and cash payments. Also, it's an easier accounting method to follow because it generally requires less knowledge of accounting concepts and principles. Lastly, it helps with decision making because it does a good job of tracking a business's cash flow. How is the cash basis accounting applied? For entry-level professional, I recommend for cash basis accounting, they should pay close attention to the cash flow going in and out of the business. It will help you to decide when the business should slow down on spending or when there's an opportunity to spend more. For a mid-level professional, I recommend that the cash basis accounting would be helpful in determining how much cash the business has at any given time. You can check the bank accounts and determine exactly where the cash is going and coming from. Lastly, for the executive level professional, that professional would need to check with the team to assure that the cash transactions are being tracked. While doing that, it assures that income is not taxed until the cash is in the bank. Understand, and the professional should also understand the difference between cash basis accounting and accrual basis accounting systems, just to assure that nobody's getting it confused, which will, as I stated, result in some tax consequences. What can cash basis accounting do? It reduces the bookkeeping cost because it's simpler and less time consuming. Companies can quickly determine their profitability using this particular method. And also for cash basis accounting, by keeping a current balance sheet, finance managers can access the company's financial situation at a quick glance, which I'm sure would be appreciated by all companies. What would be the ethical concerns with cash accounting, and how do you address it? For this method, I would be concerned that since all transactions are based on cash, that someone may be tempted to steal from the company. I know that there are certain processes that can be put in place, like comparing the bank account with the actual cash to make sure everything's okay, but that could still be something that ethically could go wrong. And also, to avoid this, the management team must keep a close eye on the transactions and the bank statements. I think the biggest thing to look at when it's concerning this is the 8th commandment, thou shalt not steal. If one is thinking of biblically what's right and what's wrong, they would avoid stealing any of the cash that's coming into the company. Thank you.